Hey everybody, Boris, this is PK Forex. Welcome to the weekly technicals for Euro dollar, dollar yen, and pound dollar for April 30th to May 4th, 2018. Dollar rally confirmed. Do we have a confirmation of the dollar rally this week that really broke out some key levels? We have a huge amount of economic data on the U.S. side that's either going to confirm or deny this big breakout that we saw last week, and it's really going to be the big question. We're now approaching some very, very key levels in the majors, so we're going to be watching the price action and the news flow very carefully. Resistance now at euro dollar is 122, and support now comes in at 120. The 120 is the key area the shorts are really targeting right now as the drive of the dollar comes in, comes in very, very strong. Dollar yen, on the other hand, we took out this 108, which we've talked about forever. That was the very, very big resistance area. Now, once we took out the 108, of course, now it's a 108, 110 corridor, and any positive confirmation that U.S. data really is on target to maintain its growth. Jobs numbers come in strong. The Fed, of course, is confirmatory on rate hikes. All of that should really, really combine towards a move towards the 110 level as the dollar really finally flexes its muscles. And the other big takeaway from this week, and one that we're going to be watching very carefully next week because there's a whole bunch of UK data as well, is the pound. The pound took out the 140 and now came down to the very, very key support of 138. So if we get further confirmation of negative data, pound still, even though it's just been battered over the last 6 or 7 days, still has a huge amount of potential for further downside as we go forward. So let's take a look at the calendar. See what's on the calendar this week, of course. On the U.S. side, we start with personal income, personal spending on Monday, which will be interesting to see because obviously if that expands, that really gives the whole credence to the idea that the Fed has a right to hike. After that, on Tuesday, on the major side, we only have ISM manufacturing, which is important but not as important as the ISM services, which is going to be coming up in just a little bit. Then on Thursday, on the U.S. side, we have the ISM services, which is really the very, very important event. And that's important especially because it tends to really forecast well, the employment component of that report tends to really forecast well the non-farm payrolls numbers, which are going to be coming up at the end of the week, which are all going to be very critical. Durables also going to be important. This is the final number, but still important to take a look at. I think on Wednesday, we have the ADP number in the U.S. side. And if that comes in strong, that tends to be also a pretty decent estimator of where the non-farm payrolls are. And of course, all of that is actually sandwiched in between all of that is the FOMC rate decision, which at this point, of course, nobody expects any rate hikes out of the FOMC in May. Everybody's expecting the rate hike in June. The language very likely to remain the same. If there's any kind of moderation, that may be a small cause for doubt, but nobody really expects that. The Fed has been just sort of uniformly communicating that they are on path to tighten rate hikes. They see the U.S. economy at a steady 2.5 pace growth, and all of that justifies the normalization process. All of that obviously puts upward pressure on interest rates, which should be positive for the dollar as we go forward. And then on Friday on the U.S. side, we have a whole bunch of non-farm payroll data, average weekly earnings, all of the stuff that we usually look at, the usual suspects for what we need to see as far as data goes. Now, that's the U.S. side. In addition to which, we also have a slew of UK data. We have the services and the composite PMI on Thursday. This is going to be the most important one. Services is the key data set for the UK economy. It makes up more than 70% of the UK economy. And here's what's interesting about that. The market is looking for a bounce back. The market is actually looking for a bounce to around 52 on the estimate, or 53 even on the estimate. The last time it was 51. If it bounces back, that should provide a little bit of a lift to the pound, that we certainly could see 140 on the pound as there's some kind of relief that the UK economy is not slipping towards a recession. But if we get below 51, in fact, if we come anywhere close to 50, it is incredibly possible. It is, in fact, I think it's almost a done deal that cable not only breaks the 138, but could head all the way down to 135, because what that will do is completely change the market's perception of where the UK economy is. The original idea for the last month has been that the worst of the Brexit issues have been resolved. UK economy has survived all of the angst. The BOE is really on its path towards hiking rates, so on and so forth. And suddenly everything in the last month has fallen off the cliff. UK economic data has really slowed down substantially. And if we are now on the edge of teetering into a recession, that will completely change the market's mindset about not only just the rate hikes in the UK, but the general hike curve of the general yield curve of the UK bond tenure, and that could really push cable all the way down. So just as it was a one-way trip to the upside, it could be a one-way trip to the downside if we get negative data here. These are the two major stories that we'll be watching: the UK data, the US data next week as the market develops. Let's take a look at the charts here and just see where everything stands. So you can see the euro really took out this very long-term support at the 122 level and came all the way down to, like, what was the low here? I think 120.55 before finally finding a small amount of support. And of course, euro, which was basically buy the 21s, sell the 24s range, now has become essentially sell the rally. You sort of have to sell against whatever was the bottom of that range, which is around 22, on the assumption that we're now in a downtrend, and whatever retrace move we have is an opportunity to just simply get short at better prices. The 120 area certainly beckons, especially if US data confirms that US economy is doing relatively well, because that will really put the 10-year well above 3 and push the euro all the way to the downside. For now, after a couple of days, we finally had a nice bounce back. So there's definitely a small possibility that we could bounce back all the way to 22s, but at that level, it would really present a very interesting short opportunity for the euro. The yen, on the other hand, broke out this 108. We, flirted around with around 109.50 and then came back down. And it's certainly possible for us to come back down towards the 109, 108.50, where this now becomes a buy to dip. So everything is really flipped around, I think, this time, where euro now is going to be sell the rally at 122s. Dollar yen is going to be buy to dip at anywhere below 109s, 108.50. So 108.50 is certainly going to be, I think, a really interesting opportunity for it, as on the assumption that this was a real genuine breakout. This is simply corrective move, and we could have a move all the way out to 110s if the U.S. data confirms the tightening policy of the Fed. And you can see how just horrendous the break has been in cable. It's just been a complete give back, not only of the rally here, but all the way to support over here in February. And if that gets broken, we really have nothing until this support around 135 in January. It means a complete distribution. I think no bigger fake out this year than the cable move into post-Brexit highs, which then gave everything back and then some. Now, it's grossly oversold, no doubt, but it doesn't matter, because cable generally can take these massive moves. Like, look, for example, the move up was a move from 133 all the way out to 143. It was basically a 1,000-point move. So a 1,000-point move here takes us around to 134 with a small pause in between. In fact, very likely if the UK data is very soft this week. So that's how the week shapes up. We're really going to be watching the sell of the euro at 122s, the buy of the dollar yen at 108.50s, and the data in the UK, which can then push it over the edge all the way down to the 135, 134 level. Wish you guys the best of luck, the best of trading. Boris, over and out.